Hi, it's Stephen Vincent, and this is a BullBear trading update for BullBear Traders members. And we're looking at a chart of the SPY, the S&P 500 tracking ETF here. And I'm looking at the possibility of a wave 5 here making potentially a lower high sometime this week or early next week. So we've got 3 here. 4, and looks like to me we're in the process of making wave 5 up. So let's go ahead and look through all of the different scenarios that are presenting themselves at this time. We'll go from most bearish to least bearish or bullish, and this would be the first would be the long-term bearish scenario, which is of course the scenario offered by the Proctarian school of the Elliott Wave analysis. And according to them, then we'd be in the C wave and potentially the final wave 5 of that C wave of major 2 correction of the former downtrend off the July 2000 up the 2007 high. So, and this is entirely possible. I would certainly put this more on the agenda if and when we got this trend line break here, but this is certainly something to consider. I don't, according to my interpretation of the long-term technicals at this time, I don't see it, but there it is. So a more plausible scenario to me would be that we're in the end of the first wave of wave 3. So we've got major 1 up ended in April of 2010. Wave 2 down bottomed in July of 2010. And then we've had 1, 2, 3, 4, and now we're making our 5th. 1, 2, 3, 4, and now the 5th of the 5th of 1 of 3 up, the first wave of the 3rd wave. Then we'll be correcting, pretty substantially correcting all of the move from July, potentially somewhere around 1188 or so at the 50% Fibonacci retracement level is a possibility. And let's look at another possibility here. Here we're looking at, we're in the 5th wave up, but we're only completing the first wave of the 5th wave. So we've got a leading diagonal rather than an ending diagonal. 1, 2, 3, 4, and now making 5. That would be 1 of 5, correcting that. To 2 of 5, maybe around 1300 would be a possible correction for that. And then we'd start 3 of 5 up from there. There's another possibility, less bearish. And moving on, what we could also see is an expanding wedge pattern, expanding diagonal pattern, 1, 2, 3, 4, and then 5, and then we'll get our correction from there. And the correction, again, could be either of the more or less bearish variety. And one of the distinguishing features here is that the move that we're seeing right now up is actually a B wave in this scenario and not a wave 5 itself. So it would be A down, B, and then we get a C down to complete wave 4 and then 5 up. And a somewhat less bearish scenario, this would actually be our bullish scenario, where we've actually got actually, let's look at this one. This would be a more bullish scenario where we've got 3 up and then A down, a 3-wave A, B, C to B, and now we're A, B, and make a C wave low to 4, so we haven't even started 5 up yet, according to that scenario. And then the most bullish scenario would be that we're not in a correction at all, and we've seen 4 down, 1 up, 2 down, then minor 1, minor 2, and now starting 3 of 5 up. And that is certainly possible. What gives me pause is the state of the technicals and the wave 5 position that we're in right now. So I'll be keeping an eye on it, keeping you updated.